Hi, welcome to our presentation. We are from Group 9. We'll present Chapter 9, which is Tax Investigation. Me, Nurhaliza binti Muhammad Amin, 265004. And my team, Nur Aina Shafika binti Muhammad Saufi, 264624. And lastly, Nur Shafinas binti Osman, 264632. So the content of our presentation is about tax investigation, the definition of the tax investigation, second, the objective of this investigation, third, the period of the investigation is going on, how long it takes, fourth, the power of the general director to impose the penalty, the fine. Fifth, anti-tax avoidance provisions. Sixth, investigation procedure. 7. Computations of evaded income offence and penalty. 8. The payment procedure. 9. Investigations method. 10. The question and the answer of the tutorial. Tax investigation. Tax investigation, it is an examination of books, documents, objects, articles, materials, and things relating to a taxpayer's business, financial matter, including personal documents. IRBM officers may obtain evidence or documents from any related person to assist in the investigation. One of the methods enforced carried out by IRBM is tax investigation. A taxpayer who is convicted of an offence is liable to a penalty, fines, and/or imprisonment. The objective of the tax investigation are two. First one is to deter tax evasion. With the tax investigation, it helps to avoid the unethical actions from those who are avoid to pay the tax. Second, to identify and prosecute tax evaders. With all the reviewing the document, it helps to identify those tax evaders and also impose them to a penalty or fine or also imprisonment. The third one is to enhance voluntary tax compliance. With all the penalties, fines, imprisonment, they will also scared to commit those violence as they can punish, and it also enhance voluntary tax compliance. Fourth, to be fair to compliant taxpayers. Those who are honestly paying tax will feel unfair with the tax evidence and lead them to follow the tax evader to avoid the pay of the tax. Therefore, tax investigation helps them to feel the fairness on the paying the tax. Lastly, to collect the correct amount of tax. Tax investigation also means as double check and collect the right amount, so there will no over or under tax payment happen in the future. Next is about period of investigation. There is no limitation to the period of investigation in the case of the fraud, willful, default, or negligence. Assessments can be raised at any time in accordance with subsection 91.3 of IPA. Power of Director General. Director General has power to impose a penalty to the taxpayers. There are two cases where, if no prosecution has been instituted in respect of failure to furnish a return or give notice of chargeability, the DGIR may require the taxpayer to pay a penalty equal to treble 3 times the amount of tax which has been undercharged as under Section 112 sub 3 of the IPA. And the second case, if no prosecution has been instituted in respect of the incorrect return or incorrect information, the DGIR may impose a penalty equal to the amount of the tax which has been undercharged as under Section 113 sub 2 of the IPA.
Assalamualaikum, my name is Nur Shakinas binti Othman, matric number 264632. Alright, next I will continue with the anti-tax avoidance provisions, which is from Income Tax Act 1967. So this anti-tax avoidance provision is separate into two categories, which is general and specific. In general, there are section 65, which related to settlements, section 140, power to disregard on certain transaction, section 140A, power to substitute the price and disallowance of interest in certain transaction, and section 141, powers regarding certain transaction by non-resident. And for the specific avoidance provisions, it is on the section 29, which is a basic period which income obtainable on demand is related. Section 23A, section 32 3A, ascertainment of value of a living accommodation for a director of a control company. Section 44 5A to 5D, shareholder continuity rules, and paragraph 38 to 40, schedule 3 on income tax rules relating to disposable subject to fraud. Alright, so let's proceed to the section 65 on a settlement. So in this section is discussed on the people who have a high incomes may split his income by settling or giving away some of his producing asset to the peoples that have a lower tax bracket. So however, these individuals are still maintaining their authority to cancel any settlement or maintaining a large measure of control on the asset or the income streams. So on this anti-avoidance provision is attempts to counteract or frustrate the income splitting effect of a settlement by deeming any income derived from the relevant property or income stream to be the settler income. Even though the settler has legally given it away, the settler still have controls towards that asset. Alright, next is on section 140, which related to the power to disregard transaction. So this section 140 this acts provide a wide and generous power to the DGIR, Director General of the Inland Revenue, to combat the tax avoidance by disregarding certain transaction and computing or recomputing the tax liability of a taxpayer. So there are 4 provisions where DGIR has the reason to believe that any transaction will produce the effect of altering the incidence of tax, relieving from a tax liability, evading or avoiding tax, or hindering or preventing the operation of the Act. Next on section 140A, which is power to substitute the price and disallowance of interest in certain transaction. So this section forms the basis for transfer pricing review or audits by the tax authorities. However, the subsection from subsection 4 and 5 of this section is related to the thin capitalization, which the implementation of this provision has been deferred by the Minister of Finance until further notice. So this part, this section 140A is not discussed deeply in this topic. Alright, so the last for the general anti-tax avoidance provision is from section 141, which is power regarding on certain transaction by non-resident. So when a non-resident engage a trade with a resident governed by the non-resident, the resident will if the resident derive a little income, and it will result to the close relationship between the two parties, the non-resident may be taxed on income reasonably expected to occur to the residents under arm's length terms. So for this purpose, the resident will be considered as the non-agent for the residents. Alright, next we will look into the first specific anti-tax providence, which is on section 29, which is a basis periods to which income obtainable on demand is related. So in this section, it discusses on the gross income, which is the gross income from interest, discount, rent, royalty, pension, annuity or any other monthly payment is taxable only when received. So in these sections, it puts that the anti-tax avoidance measure to allow that incomes to be taxable even though the gross income has not been obtained but it is obtainable on demand. So for example, suppose a taxpayer is due to obtain an interest and the payer is willing and able to pay the interest. So if the taxpayer decides not to collect the income right away, section 29 can be used to determine if it can be shown to the payment that available on demand. Alright. Next is on the section 32, subsection 3A, on the ascertainment of value of living accommodation for a director of a control company. So in this section 31A, it compares the identified value of living accommodation provided by an employer to 30% of employment income in calculating the value of living accommodation to provide to an employee. So the lowest two figures is considered as employee taxable value. This technique is usually used when there is a genuine employer-employer relationship in a certain company. Okay, next is on section 44 5A to 5D on shareholder continuity rules. So in this section is discussed when the shareholding when the company shareholder changed significantly during a basis period, any unabsorbed loss and capital allowance are brought forward are disregarded, which means it will essentially lost forever. So however, this provision have been temporarily suspended or deferred. So this law is only applied to significant change in shareholdings in a dormant company. Okay, so the last anti-tax avoidance provision from specific is on paragraph 38 to 40, schedule 3, on income tax rule relating to the disposal subject to control. So this paragraph is related to the calculation of the capital allowance where the qualifying assets are transferred between related parties under common control. So there are a few risks where the disposal price may be artificially inflated to increase the acquired claims of capital allowance, or artificially deflated to result in a larger balance allowance for a disposal. So as a result, the ministerial regulation are intended to consider the assets to be transferred of the assets residual expense. This will result to zero balance changes. Okay, so
there are 5 methods on how to do selection of cases when we want to do fraud investigation. The first one is risk analysis. The second one is information from informer. The third one is review of income tax return form or ITRF. And then the fourth one is intelligence information, and the last one is information from other law enforcement. Okay, for investigation procedure, we need to follow these 5 steps, which is request for documents and information, inspection visit, examination of document, record statement, and finalize of investigation. So I will explain details each of them in the next slide. For step 1, we need to request for documentation and information to do investigation. Okay, there are 2 things to do in this step, which are: the first one, we need to issue letters request for documentation and information from taxpayer, tax agent, and third party. Okay, and then they might be required to send it at IRBM office, and the RMBM also might visit the taxpayer business premise with written notice. Step 2 is inspection visit. In this step, the investigator need to follow these 10 procedures to do inspection visit. First, they need to introduce themselves by showing the authority card. And then second, inform the purpose they are coming to the taxpayer business. And then the third, explain to the taxpayer the power of IRBM officer are having, and this one I will explain in the next slide. And then the fourth one is access, download, and take any relevant information for electronic media. The fifth one is take photo of the location. The sixth one is inform the scope and duration of examination. The seventh one is inform the name, office, telephone number, and official email of IRBM officer and the director of IRBM investigation branch in charge of investigation. Act is inform the taxpayer of his right and responsibility during the examination. The ninth procedure is interview the taxpayer and other related person and record it. Last procedure is provide written acknowledgement of receipt of the document duly signed by RMBM officer. Regarding the IRBM officer power, they have 3 main power. The first one is full and free access all land, building, and places, all books and document, object, article, and other matters. The second one is may search all land, building, and places, as well as examine, make copy of or extract from any books, document, object, article, and other matters without making payment. And then the third one is seize and take possession of the relevant document. Step 3 is examination the document that have been retrieved from inspection visit. The inspection visit video earlier are together evidence of tax evasion, and we need to inspect taxpayer business document or personal document. And then the IRBM officer need to request any party to produce document in his custody or control. The step 4 is record statement. At least 2 IRBM officer need to present during the recording statement from person related the case, and the qualified lawyer can be present during the recording session. Okay, the last step of investigation procedure is finalization of investigation. Okay, after complete the investigation, the IRBM will issue a letter to taxpayer to confirm the finalization of investigation. If the settlement is agreed by the taxpayer, an agreement letter will be signed. Then the investigation is considered finalized after it has been approved by Director General of Inland Revenue or DGIR, and assessment is raised, the taxpayer will be monitored by RRBM. But if taxpayer did not agree with the settlement, the Director General may according to the best of his judgment, raise an assessment with penalty. And then the cases that are to be prosecuted will be forwarded to the legal department. Next, I will explain the non-compliance offences and penalty. As stated here, there are three types of it. The first one is failure to furnish, return, or give notice of chargeability. Failure to furnish ITRF is an offence under Section 112 of the ITA. Under subsection 112(1), ITA taxpayer who fail to furnish the ITRF for 1 year of assessment should on conviction be liable to a fine of not less RM200 and no more than 20,000 ringgit, or to imprisonment for a term not exceeding 6 months or both. Okay, whereas under subsection 112(1)(a), taxpayer who fail to furnish the ITRF for the period of 2 years of assessment or more on conviction be liable to a fine of not less than 1,000 ringgit and not more than 20,000 ringgit, or imprisonment for a term not exceeding 6 months or to both. Okay, the taxpayer should also pay a special penalty of treble 3 times and the amount of tax which have been undercharged. If no prosecution has been instituted in respect of failure to furnish a return or give notice of chargeability, the DGIR may require the taxpayer to pay a penalty equal to treble 3 times and the amount of tax which have been undercharged as under section 112(3) of the ITA. The second one is incorrect returns. Making incorrect return by omitting or understating any income of which the taxpayer is required to make a return on behalf of himself or another person, or give any incorrect information in relation to any matters affecting his own chargeability to tax of any other person is an offence under subsection 113(1) of the ITA. If the taxpayer is guilty of the offence, shall on conviction be liable to a fine of not less than 1,000 ringgit and not more than 10,000 ringgit, and shall pay a special penalty of double the amount of tax which have been undercharged. If no prosecution has been instituted in respect of the incorrect return or incorrect information, the DGIR may impose a penalty equal to the amount of the tax which have been undercharged as under section 113(2) of the ITA. The last one is willful evasion. Willful evasion is offences under section 114(1) of the ITA. The taxpayer guilty of the offences shall, or on conviction, be liable to a fine of not less than 1,000 ringgit and not more than 20,000 ringgit, or to imprisonment for a term or for not exceeding 3 years or both, and shall pay a special penalty of treble time the amount of tax which have been undercharged. In this slide, I will explain the payment procedure when the taxpayer have been charged with offences and penalty. Okay, the first one is the tax and penalty should be made in one payment to DGIR, and the payment should not be made twice or more. And then the second procedure is the taxpayer can pay it by installment. The initial payment of at least 25% of total tax and penalty should be submitted, and then the remaining balance and period of installment allowed by DGIR is all post-dated check for installment payment must be submitted together with the agreement letter. But if the taxpayer who fail to comply with the agreed installment will be subject to tax increase. And then the last procedure or last option is taxpayer settle the penalty in the manners decided by the court.
Next, I will continue on the investigation method. There are three methods, which is mean test, and the cash test, and the capital statement test. Alright, so I will proceed to the first, which is the mean test. Next, I will continue. Alright, so we take a look on the first investigating method, which is mean test method. So in this mean test method, it will indicate of what might available for a personal and private living expenses based on taxpayer return of income on a certain period. So let's look into this example. The return of a taxpayer show a capitals to be RM100,000 and to be RM160,000 at 31st December 2019. So other details were as follow, which is business drawing 40,000, income tax paid 800, life insurance premium 1,000, school fees for children's overseas 10,000, money lent to uncle 30,000, and income declared from year assessment 2015 to year assessment 2019 100,000. So the required is to compute the under assessed income, assuming that the taxpayer had declared a total sum of 100,000 for the year assessment mentioned. So here is the solution for the mean test method. First, we will take the ending capital at 31st December 2019, which is 160,000, less the capital at 1st January 2015, 100,000, we get 60,000. And then we will add with all the expenses that related to private living, which is income tax paid, life insurance premium, school fees, loan, business drawing. And then we will get totals of unparent income 124,800. So here is the solution for the mean test method. First, we will take the ending capital at 31st December 2019, which is 160,000, less the capital at 1st January 2015, 100,000, we get 60,000. And then we will add with all the expenses that related to private living, which is income tax paid, life insurance premium, school fees, loan, business drawing. And then we will get totals of unparent income 124,800.
Okay, the second method is cash tax method, which is we will determine the amount of money available to meet cash spending. It is done by taking total receipt, both capital and revenue, and then the less money bank. The money available is then compared with the total expenditure made by checks drawn on the bank account, whether business or private, or whether capital or revenue deducting payment. And then expenditure paid in cash paid. And then the expenditure paid in cash should be equal to the cash available to meet it. And then under this test, there can never be a negative cash balance. Otherwise, it will be interpreted that there is income omission by the taxpayer. Is an example for income under assess because the figure is in negative figure. We will start with income from business 200,000, and we will add up with gains from share speculation 300,000, and then the total amount is 500,000, and we will less it with total amount deposit at the bank as per statement 400,000, and we got 100,000. The amount 100,000 we need to less with estimated cash expenditure 150,000. Okay. So when we see this, we can see the estimated cash expenditure is more than with total amount deposit at the bank. That's why we got the income under assets 50,000, negative 50,000.
Hi, back to me, Haliza. Okay, I will explain about capital statement test method. This test is conducted may trigger of a detailed investigation of the income committed or omitted. The procedure adopted to determine the tax evidence is the net assets computation, commonly known as the capital statement. So the objective of this test is to determine the amount of the money saved and to add to this amount the estimated annual outlay on living expenses, income tax paid, life insurance premium, employees provident fund (EPF). Okay, as usual, the total income comes from the saving plus with expenditure, and as usual also as normal, to compute the taxable tax total income comes from total of living, which is non-business expenses and losses, plus with increase in capital minus with non-business receipt. You can get taxable total income. Computation covers the whole of the net assets, processes, and expenditures incurred by the individual. Married person is required to reflect the investment and asset held in the name of his wife and independent children in his capital statement. There are 4 steps. The first step is determine the taxpayer's net assets for each year and 31st December under investigation. Second step, determine the estimate personal and private expenses for each year. Third step, compute the apparent income for each year. Lastly, determine the underassessed income.
Okay, let's see. Mr. F, a sunray shop trader, owns an orchard. He lives in a house inherited from his father. On 1st September 2015, he bought a bungalow for 200k, from which rent received for 2016 was 8,000, and subsequently 20,000 P.A. His other source of income for the period under investigation were 50k shares sold in February 2019 for 70,000, and life insurance premiums in respect of himself and wife were 5,000 P.A. Income tax and living expenses paid P&A were as follows, like that. Other expenses for children's education amount for 6,000 annually up to 2018 and 50,000 in 2019. Okay, the others net dividends received in 2017 were 5,000 and 2018 was 10,000. Fixed deposit made in 1st August 2016 amounting to 100,000 was uplifted on 30th June 2017. Interest earned next of tax deducted at source now amount to 5,000. The following is an extract of the statement for the years under investigation. Okay. Net assets computations. Mr. F's wife savings were as follows. Okay, so the required compute the income understated for the year 2015 to 2019. Okay, so compute the income understated for the years 2015 to 2019. Okay. The first, you can see business capital plus with profit or minus loss balance plus bungalow investment in shares, fixed deposit plus with saving and his wife's saving also. So you can get the total and minus the capital before. Plus with increase or decrease if any have. Plus with any expenses like insurance, income tax, living expenses, child education, capital gain. You can get a parent's income. Minus with available income, profit, interest, rent, dividend. So, in 2017, you can see there have thank you.